Greetings all and welcome to AlgoFox Academy. In today's lesson, we are going to discuss a very powerful strategy. A strategy that will help you identify where exactly big institutional or retail traders are entering and exiting. We will not use any fancy indicators or price action. Rather, we will focus on only one simple indicator, that is volumes. By the end of the strategy, you will also realize that the win rate of the strategy is more than 80%. We will actually backtest that, and you will also notice that the risk reward of the strategy is 1:10. Let's dive into my screen and explore the strategy. So before I talk about the strategy, let me first show you the verified P&L also, just to give you the confidence on how exactly the strategy has performed in the past and what are its strengths and weaknesses. So I'm just going to my Fires account, verified P&L for the month. Since the strategy works purely on equity, let me just show you for equity segment and maybe say monthly. So in the month, you will realize that we have made more than 1,48,000 in Jan month in last 10 days. It's 11th of Jan today. But let's focus only on equity segment. Now in equity, we have made close to 74,000 rupees. And now you'll see here that we have taken few trades: Dalmia Bharat, HAL, Delta Corp, PFC, and then there's Bajaj Finance, which is still open. All of these trades were taken on the criterias that I'm going to discuss today in detail, right? So let's move on to understand the logic, the entry conditions. We're not going to use any indicators, rather work on pure entries and exit logics of big players or institutions. So to understand what were the entry criteria of these stocks, how did we make money, and can we also work on futures and options using the same setup? We're going to discuss all of this, but before that, let me take you to a whiteboard, and here let me explain you the logic. The logic is pretty simple. If a stock is going in a certain trend, let us say it is constantly going up, at any given point, there can be a profit booking done by big players. Now, the big players can be institutions or big retail traders or even DIIs. Now, if at any given point there has to be a profit booking, then from there onwards, the market usually tries to come down, and this point kind of becomes the highest point. Now, of course, there is no way using any technical indicators you will be able to predict which is the highest point, but there are few data sets which can tell you which is the highest and lowest point for a stock. I am going to talk about that in detail as we go ahead in this video. Now, let us say from this highest point, market tries to come down, and we will notice in the volumes chart that the volumes were slowly accumulating, and at this point when there was a big profit booking, we'll see a massive volume. Now, this massive volume might be much bigger than all the previous volume candles, and this gives us a hint that at this particular point or at this particular price, something interesting has happened. Either there has been a massive entry or there has been a massive exit. Again, to tell you that just by seeing volumes, you cannot predict whether the bigger players are bullish or bearish, because volume consists of a buy and a sell. One buy and one sell combined becomes a volume. So even if the volumes are very high, we are not sure that at this point whether there is a big entry or a big exit. So we have to wait for a while, and once that candle completes, from the next candle onwards, we kind of get a direction that whether the big players have taken more entries or they have exited their positions. Similarly, on the reverse side, if the market is constantly going down and suddenly, let us say the volumes are normal, and on suddenly there is a big massive volume at any given price, right? So this price has a very high probability to become the lowest price, and from here we can expect the market to go up. Now, there are some more conditions here. First condition is that when the market has to go up, it need not be the downtrend. So I've given an example where the market goes down and at this point suddenly there's a huge volume spike and from there market goes up. It need not be that case. The case can be the market is flat for quite some time and suddenly a big volume spike pushed the market up, or the markets are constantly going up and a big volume here can also push the market up. Now, as I said, in all the three cases, the probabilities are market can go up or down when there is a big volume. So big volume gives us one confirmation that from that point onwards, market has a high probability to stay volatile. It can go massively up or massively down as well. So let me give you a few examples on the chart and then we will build the logic on the chart as well. So to begin with, let me go to trading view and show you today's examples. Let's focus on Havels. I'll go to NSE and I'll go to a 15 minutes chart. Now you'll see here, very interesting thing. I'll just zoom out a little bit. Notice the volume on every day. Usually on every single candle, the volumes are 5.817K, 8,000, 9,000, 7,000, 4,000, so forth and so on. And today morning, the first candle has a volume of 1.3 million. Now this kind of gives a clue that a big entry has happened here. Again, till this candle completes, I don't know whether the big entry is on the bullish side or on the bearish side. But once the candle completes, for me, rough estimation would be that I will just mark the high and the low of the candle. Now, if big players have done entry or big money is involved on the bullish side, they will not want the market to come down right from their entry price. So usually the tendency is that the market can go up. Similarly, if this would have been a profit booking scenario, then from here the market would have come down and there are very low chance that the high of the candle would have been taken out. So for the first candle, we can mark the high and low. High can be our entry point or low can be our entry point, which depending upon which triggers first. In this case, we got an entry on the buy side at around 1440 and right now the price is at 1452, right? Similarly, let me give you one more example. Shriram Finance, beautiful. Again, notice the volumes. There's 9,000, 10,000, 1 lakh, 78,000, 44,000, so forth and so on. And suddenly today, morning it had 482,000, almost 500,000. Again, we simply mark the high and the low of the candle. And if the high is broken out, we tend to enter onto the buy side. Now, if I have to show you again, coming back to my verified PNL, and if I have to show you all the examples which gave us profit, there is Dalmia Bharat, Delta Corp, PFC and everything. Delta Corp is something that I taken yesterday itself. Even I had tweeted about Delta Corp on my Twitter handle. Let me show you Delta Corp as well. A beautiful setup. Delta Corp. Perfect. So look at this. On daily basis, 1 lakh, 2 lakh 30,000, 1 lakh, 2 lakh 50,000. These were the volumes. And yesterday morning, 4.2 million transactions in a single 15 minutes candle. So it basically tells you that big entries happened here. And I'm not sure whether the entry is on the buy side or the short side. So we wait for the first high to be taken out. And when the first high was taken out here, somewhere at around 147, from there, the market has rallied up beautifully. This can also be used as intraday setup or positional setup. In fact, I have built a Pine script and I'm going to show you backtest result of the strategy as well. Few things that I want to tell you here is, look at this here. So the volumes here are very, very small. 2 lakh, 4 lakh, 1 lakh, 2 lakh, and suddenly here the volumes are 2 million. Can this also be considered as a very big entry? The answer is yes. But I usually try to prefer entries on the first candle itself. Here you will see that the entry is at 12:30. So in between of the day, if there is a sudden big spike, it mainly can be because of news or sentiments or maybe or big institutions trying to enter or exit, which does not provide me enough clarity. So to simplify the trading setup, what we have done is we have simply given a rule that we'll check this condition only on the first candle of the day. And if first candle of the day has very big volumes compared to the previous candles, then and only then we have to take trade. To quantify the number on the volume, I have defined that if first 15 minutes of the candle has a volume which is greater than 50% of the entire day's volume of yesterday, then for me it is a very, very big quantity. For example, in the entire day yesterday, the volume could have been close to 5 or 6 million for the entire day for 6 hours. But in the first 15 minutes, 4 million volumes are already transacted. That means at this point, the volumes are so high that it is greater than 50% of the last 1 day's volume. So this basically gives me a quantified parameter, right? And so when this thing happens, we basically mark high and low and then we take a trade. So in fact, I've already built the strategy. Let me plot it on TradingView and show you where all it has given entry, what is its accuracy, and how it can be used for trading in futures and options as well. So I'll go to Pine Editor, open new strategy, paste it. It's a 435 lines of code, and I'll simply click on add to chart. The moment I do this, you will see the backtest result here. Profitability is 66.67%, but profit factor is bad, drawdown is bad, net profit is also bad. Here in the settings, we have previous day multiplier of volume. As I said, it should be 0.5%, 0.5x. That means 50% of last 1 day's volume. Then if you are an intraday player, you can have risk reward ratio. If the candle's high is your entry point, then low is your risk. So compared to risk, you can have 1 or 2 target, 1:1 target, 1:2 target, or you can even edit these parameters. And instead of intraday, if you want, you can even switch to positional mode, where once the entry is taken, we also carry forward the trades for several days. For example, on Delta Corp here, you can see this is where the criteria gets fulfilled, and then the second candle gives you entry. This orange color is your trailing stop loss, and this, let us say, is your target 1, and this is your target 2. Now, as you edit the quantities or risk reward ratio of targets, your win factor, your backtest result will also keep changing. For example, I want to allocate, let us say, 1 lakh rupees on this equity, and I want to take positional trade. So let us say quantity will be based upon exposure. That is, I want to buy shares worth rupees 1 lakh. 50% I want to exit at target 1. 50% I want to exit at target 2. Now if I do this, you will see that the win probability is 50%. We took 46 trades, 23 times we won, 23 times we lost. Risk reward is 1:1.3, and overall in the last 3 years you took 46 trades and you made 9% on this particular strategy. Now this is when your risk reward and your targets are very, very small. If you want, you can even increase the target. Let us say target 1 can be 2%, target 2 can be 4%, and you can play around with the risk reward ratio. If you're someone who does not want to have targets in terms of risk, we've also given targets in terms of percentage, points, or you can even switch off the target and you can let the trailing stop loss trigger the trade, right? So if I switch off the target and if I let only trailing stop loss, then the profitability is only 1%. Similarly, if I keep the target in terms of percentage, then the win rate is high because 2% or 4% target is easy to achieve. Let us say when we usually try to trade the trades in positional, first target can be 3%, second target can be 5%. And this way you will see the win rate probability is 52% in Delta Corp. It varies from stock to stock. For example, if I go to something like DLF, The win rate is 60%, profitability is 1:2.5, drawdown is very, very less, and profits are also close to 9%. And if I have to show you some entries on DLF, it automatically picks the entry. Look at this. It's very, very simple. The first candle of the day at 9:50, the volumes were extremely high. So automatically the high and lows are marked. High was broken somewhere here, and we take a trade. We got first target here, second target here, and a orange color trailing stop loss. Similarly, there are days where it might have not performed or it might have given us losses also. Let me show you that as well. For example, this was a candle where the volumes were extremely high and high was not taken out, low was taken out. We did a short here, and then the trailing SL got triggered. So you see here the trailing SL got triggered because I'm using positional mode. Similarly, if I want to check the accuracy on intraday mode, I can do that in the settings for DLF. Instead of positional, I can switch to maybe intraday mode. So we'll take trades from 9:15 to 2:45 and then exit at close to 3:15. So you'll see here for intraday, most of the part we were loss making. We have recently become profitable in maybe last quarter or so. So this strategy usually works very well on positional, and hence we can prefer taking positional trades. If you want this particular strategy completely free of cost, no hidden charges, no terms and conditions on TradingView, and if you want to automate this strategy from TradingView to your broker terminal, all you have to do is just click on the link below and open an account with us in Fires. The moment you open an account with us in Fires, you can contact our support team. Again, the number of support team is mentioned in the description, and we will help you get access to this particular strategy completely free of cost. Second, if you are someone who just want to verify entries, then you can even build this particular scanner on Charting. For example, I've already done it on Charting. Let me just go to Charting. In the scans, we have the name I've given as FII entry. Now here, you will see today Havel and Shriram has come. Havel is already up by 4%. Shriram is also up by 4%. Similarly, there is one more scanner name called FII exit that I have written. Today, there is no stock filtered as per the logic, right? So even if I want, I can even backtest for last 1 week here itself and check the reports. In the last 1 week, there are close to 12 trades that have come, in which 9 have given us profits and 3 have given us losses. Now the same strategy also works on futures as well. This is the return. So in futures, since it is 2 lots, win rate is 40%, profitability is 2.564, but in the last 3 years, in just 20 trades, it gave you 88% returns. Similarly, I can check anything else, maybe PFC futures. PFC future has given 265% returns, where your win rate is 77%, profitability is 10.384%, amazing returns in PFC. Similarly, I can check any other script of my choice, for example, HAL futures. HAL futures has also given you 25% returns. So you'll see any stock that I'm trying to enter here, the results are in green. Very rarely you will see that in the last 3 years the net result is in loss. For example, instead of HAL, I can choose anything else, maybe Reliance. Now Reliance, it also gave 63% returns. Look at the accuracy, 80% accuracy. Look at the profit factor, 6.575 is the profitability. So 80% of the times the stock has given you profits in Reliance. Similarly, more prominent scripts like State Bank of India, again, win rate is 50%, profitability is very, very high. The strategy just works amazingly on futures as well. So very simple, but very, very powerful strategy. Do check it out if you want the access to this strategy, and if you want to automate this strategy, you can use AlgoFox. And to get access to this strategy completely free of cost, there's only one step. Click on the link below, open an account with us in Fires, and get access to this strategy completely free for air. I hope this strategy helped you understand about markets in a little bit better way. If you want to learn more strategies and more such ideas, stay tuned to our channel, subscribe to our channel, and I'll see you in the next video. you.